Hey everybody, Courtney Smith here with our October 10th edition of Wall Street Winners. Well, I guess I was probably the only one to tell you that the bear market's not over yet, but it may be getting close to the end more than we are towards the beginning. But over here you can see I artfully drew a circle there, and what I'm pointing out is we left what's called an island reversal. We gapped up about 4 or 5 days ago. We gapped down on Friday, leaving an island of 3 bars. We did it on slightly lower volume. Would have been nicer if volume had moved a little bit more. But nonetheless, it is a bear sign telling us that we are moving into another leg on the downside. We'll get to seasonality in a minute, which has some important information. But right now, we're in another bear leg. If we look over here at the Dow Jones, we can see the same island reversal here. We're going to break these lows here very, very soon. And you can see in the upper box here how the selling pressure accelerated to the upside at the same time buying pressure was going down. NASDAQ, same picture, same island reversal here. Also showing that the market's going to make another leg to the downside. Now, seasonality, I've drawn, we're getting close to a seasonally bullish period. What we're supposed to do is we're supposed to see the stock market become bullish here in October. You can see from September 30th to April 30th, we're in that time zone. But we need to have the market tell us that the seasonality is kicked in. So I've drawn a green line here, green for go. If we break up through that line, then I'm going to say that we're in a seasonally bullish period, and I'm going to start putting on 50 to 100% larger positions on the long side. But right now, we're not there. Now, as we move lower, I may move the green bar down to these highs, but we're not there yet. Utilities, we're at the very end of their bullish period, and it wasn't all that great, so who cares? Now, here's the point. We're supposed to see a little bit of a rally here, which I think was really last week, and then we're supposed to drop sharply to the low of the whole seasonal move, right here near the end of October. So that gives us, a couple more weeks on the downside, and then we're supposed to go into a significant bull market, a normal bull market in a midterm year. So right now, seasonality is held up, has worked perfectly so far this year. So right now, we're going to have to say, once we get down here towards the end of October, we have to start thinking much, much more bullishly. Now, you may be saying, how is that possible? We're just going into a recession. Yes. And the recession's not even anywhere near as bad as it's going to get. It's going to get much worse. But remember that the stock market will rally in the depths of the recession. That's the best time to buy. The stock market is in the absolute worst conditions. Now, we're not at the worst condition, but if it gets worse from where we are now, if, say, November 1st, unemployment numbers are negative or very, very weak, the market will start to believe that the Fed is going to ease monetary policy, or they're going to look ahead to the first quarter of next year and say, the Fed's going to ease very soon. And remember, it's the anticipation of the Fed easing that will cause the bottom to occur. So the bottom's going to occur way before the fundamentals tell you it should. Don't forget that. That's why you're a subscriber to Wall Street Winners, either the freebie or the paid for version. You want to know how to really make money, how the markets actually work in the real world. Asset allocation, nothing going on here. Stock market risk indicator, also very stable at a low level. Global shares, we didn't get the island reversal. We actually had an island bottom, but now we've negated that. See you later, global shares. Nothing going on here. Hardly anything's going on except for that island reversal. Bonds breaking to almost a new low close, almost a new low. Purple predictors degrading rapidly, which tells me that we're going to see bonds move lower. Now, the interesting thing is, let's go back to this chart. Notice that except for the very beginning of the yield curve here on the left-hand side, it is negative. It is negative. And so what's happening is, as the Fed is tightening short-term interest rates, we're seeing long-term interest rates go up at the equivalent amount. So this is what's really going on here for it right now. Now, it's a little early to tell, but we've been saying that we've been following the blue line. The green line is 10-year Treasury skyrocketing. We've been saying the biggest influence is the 10-year Treasury in Germany. But look at what happened in the last week. A sharp increase here in the CRB and a sharp increase in gold. Now, this is premature. We can't say that it means anything right now. And right now, I'm actually saying that the decline in both of these instruments suggests lower interest rates 6 months from now. So that would be March-ish. Okay, March-ish. But the signal has never been wrong since World War II. This is one of my unique indicators, one of my unique analyses. Nobody uses this in the whole world, but you're seeing it here live and in person. Okay, dollar started to rally again because of what I just showed you. Interest rates are skyrocketing, making the dollar more attractive. Why? Because the Fed is the most aggressive tightener in the world. Yes, other people are tightening. Yes, Bank of England. Yes, ECB. They're all tightening, but at a slower rate, at a weaker rate. The only places that still have loose monetary policies are Bank of Japan and the People's Bank of China. Not that other bank in China, the People's Bank of China. So gold had a nice rally here, but I think it's going to end now that the dollar is resuming its bull market. And fully paid up members, you'll see another reason why I think this thing's heading back down to the old lows. We don't want to be long gold in this environment. That'll be next year. That'll be next year, but not this year. This year, we want to remain short. Why? Because the doom and gloomers got everybody long early in the year because inflation was coming back. So, yeah, I think silver is going to outperform over the coming period of time. Yeah, well, wrong again. Sorry, wrong again. The purpose of a market is largely to slap around suckers, i.e. retail investors. So those ads on TV, they got all the suckers long, precious metals. We're in the process of slapping them down, taking their money and giving it to the professional investors, which is why you're a subscriber to Wall Street Winners. You want to know what the pros are doing. Okay, here we can see that our indicators are basically negative, but they're showing a little bit of strength here, this one's not showing any strength, but these two are showing a little bit of strength. I still rated them as 2 bearish, 1 neutral, so we still got to remain on the bear side of gold. Over here, crude oil. The announcement that OPEC is cutting production by up to 2 million barrels a day shocked the economy, shocked the market. We're seeing a rally here. We should see oil go up to around 95, 96, 97. I don't think we're going to get above 100. I don't think we're going to get above 100. Why? Because the supply is being cut by 1 to 2%, which is a lot in the oil market per day. But demand is starting to crater as the world economy goes into a recession. So it's a battle between declining demand and declining supply. Which one will win? Well, I think right now declining supply is winning. But once we get up around $100, we start to see gasoline prices pushing $5 again. We're going to see the demand side start to collapse a little bit quicker. So I don't think we're going to go back up to 120 at all. 100, I would be stretching it if we got to 105, but I'd say 100, 102, something like that. Purple predictor is bullish, so that is helpful for the longs. Bitcoin, I remain short Bitcoin. Purple predictor looks like the smart money is giving up the ghost a little early to really make that a conclusive decision, but nonetheless, this weak rally, terrible. All right, freebies, you know what to do.
Hey everybody, Courtney Smith here, and I just wanted to kind of reveal with you one of my secrets of my success, and that is I use a website called stockbutler.com. And the reason I use it is because it saves me so much incredible time, and it was based on my forms of analysis. The Stock Butler was developed by one of my brilliant students. Of course, all my students are brilliant, you know that. And he designed it around my technique for fundamentally selecting stocks. So all you have to do is you come here, you go to rate, you go to best of the best, that's the name of the technique, and bingo, there's the list. And then, since there's only 4 stocks there, no problem. Go up to rate, go down here to advanced stock list. I usually change this to main E table, update the list. Anything in green, I'm interested in. Now, I know that these are fundamentally powerful stocks. Now, all I have to do is go find the correct technical entry and exit point. So, Stock Butler saves me a tremendous amount of time, keeps me focused on only the best of the best stocks instead of wasting my time on other garbage. All right, everybody. We'll see you later.